Hello everyone, thank you for joining us today and welcome to this educational presentation of this new strategy that will change the way you trade. And I truly believe that because we're getting testimonials from students around the world that have actually signed up for this new strategy and have been trading it just for the last couple of months and are giving us some really nice results and telling us how easy it is. For example, let me start out by sharing with you this chart in CHTR. This was just roughly about 3 or 4 weeks ago. And as you can see, someone looking at this, the way most people would trade, would say, well, this stock is clearly going lower. In fact, it's in a downtrend. So I don't want to buy something if it's a downtrend, right? This is where you want to be looking to sell or perhaps just stay out of it altogether. Well, this strategy actually detected not only one, but a total of 2 buy signals, as a matter of fact. This was on the 7th and 8th of March. And as you can see, whoops, a little bit quicker there. The stock went up 28 points in the next couple of weeks. Now, this was the potential you could have captured with this particular stock, 28 points. I'm going to show you a lot of different examples, a lot of different markets, a lot of different directions, and show you how versatile this actual strategy is. And you're going to see also how simple it is to execute on our new platform. This is the PTS Primo charting platform, the educational portal that teaches you how to trade in both up and down markets. And you'll also see that all of the signals that this new strategy generates are automatically generated on the platform as well. So this is going to be a great presentation. Thanks for joining us once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. If you're new to my webinars, we are all about one thing only, and that is teaching you how to trade, because we are first and foremost an educational company. I teamed up with Proprietary Strategies 10 years ago with that one goal in mind, simply to educate traders around the world. And now we have students in over 115 countries and in virtually every state in the United States. And people will say, well, why are you focused on educating? Why don't you just, sell these strategies or give us the signals? Because it's my opinion that that's what's missing from most traders' lifestyles is education. The reason why it's been estimated that 85% of all traders fail is because you don't have the proper education. So you basically just listen to what someone else does, or you take someone else's signals. But once you learn how to trade, and once you finally put these things into practice, you're responsible for your own decisions, and that is the only way you become consistent. So I'm not the type of person, or this is not the type of webinar where I'm going to tell you exactly what to trade and what market to trade and what time frame. We don't believe in that. But what we want to do is educate you. I've been trading for 42 years now. I started on the floor of the Pacific Stock Exchange, where I made markets in roughly about 50 stocks. That's why you get the name Specialist Trading, because I was a specialist. A specialist is someone who just specialized in making markets. So I've seen and traded just about everything you could think of. I know what works in terms of consistency, and I know what doesn't. So that's what our goal is, to simply educate you so that you don't have to rely on anyone or anything else to make your decisions. You can, for the first time, be in charge of your own trading destiny. I'm going to share with you just some really nice signals that have occurred in the past month using this past strategy that I talked about. But before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results and a lot of different time frames and markets. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. So once again, as you're taking a brief view at our required disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there if you want to copy that down. It's abbreviation for Specialist Trading. I post different things on a daily basis, anywhere from signals that our strategies have generated to little bits of financial wisdom I've accumulated along the way. So there's lots of great free education on our Twitter page. Feel free to follow us on Twitter. Okay, so as I stated in the opening statement, we are a little bit different from other companies in the fact that our only goal is simply to educate you. We're not here to tell you. I must get on a daily basis emails from new students or prospective students who say, Steve, what's the best market to trade? Or what do you think is your best strategy? Or what is the best time frame? And in my opinion, that's a recipe for disaster. I would never tell anyone what the best market or what the best time frame is, because once again, that would be doing you a disservice by taking you out of the game. It's our goal to teach you how to trade, but not to trade for you. Think of it. think of how you make your own trading decisions. Think of how the entire industry is based on. It's based on actually doing the work for you. Actually, they have some system where all you have to do is follow the up and down arrows, and it will automatically generate the signal, so you don't have to do anything on your part. Or you go to some signal service or some chat room, they tell you what to buy or sell, you don't have to do anything. Or you listen for the news or some guy on TV, and you don't really have to do anything because that decides for you how to trade. And if these things work so well, why do 85% of all traders fail? It's because they really don't work. There's no consistency in that. No two traders should trade alike. That's the great truth about trading. So if no two traders should trade alike, then how do you trade? Well, you have someone mentor you and teach you basics, things that have stood the test of time, formats that work, and then we work with you to decide how you want to trade it. Do you want to trade it aggressively, conservatively? Do you want to stay in for as long as possible? Do you want to get in and out in quick trades? Do you want to have a tight stop or a big stop? It's up to you. But we provide all this information for you so that one day you don't have to rely on anyone or anything else. You can just be there making your own decisions. So that's the way I was taught. And truthfully, that's what has sustained me now going on 42 years. So that's my goal, to teach you how to trade with the specialist edge, the same edge that was taught to me some 42 years ago by my mentors. Now, since this is going to be an educational classroom today, once again, I want to take all of your questions, as many questions as possible. But please wait till the end of class to ask questions, okay? We're a little bit different from other presentations in the fact that we don't like to stop at every slide, or we'll be here far too long. And many times, if you just wait for the next slide, your question will be answered. So please, if you have a question, please wait till the very end. The only question I will answer is the most common, and that is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical issues, don't worry. We will supply each and every one of you a link to this recording, okay? So once again, if you happen to join us late, please wait to ask questions till the very end. Okay, with that stated, let us begin today's presentation, but let's begin also with an apology. Now, I pride myself on these weekly webinars that I do, free webinars, with giving you some education. Now, even though, we realize that not everyone is going to become a student and become a member of our courses, I like to leave you with something to go on, because I think that as someone who really is sincere about this, even if you decide not to become a student of mine, at least you went away from one of my free webinars with some information that perhaps you didn't know about. Now, unfortunately, this new strategy I'm going to be talking about today is probably the simplest strategy I've ever traded. How simple is it? Well, it only has 2 rules. I've never traded anything this simple. So therefore, I can't give away too much information, because for fear of you reverse engineering it. It would be very simple if you've been trading for a while to reverse engineer. So I apologize. Usually I give sometimes 1 or 2 rules away to some of our strategies, just so you can get a basis for the foundation there. But unfortunately, I'll only be able to give you 1 clue today, because if I gave you the other one, most likely you would figure out how to generate signal. So I'm beginning today's presentation with a little backpedaling here. Okay, so let's talk about this strategy. It's strategy number 9. And when I say new, it's an entirely new strategy, because we only launched it in January. And since then, though, it is being traded by students around the world and in just about the majority of the states, United States. It's a proprietary pullback method. So I'll explain and go into detail if you're not familiar with what a pullback is in just a few moments. The beauty of strategy 9 is that even though I'm going to have a propensity for sharing stock examples today, you can virtually trade it on any market, in any time frame, in any direction. So I know a lot of you may say, well, Steve, I don't trade stocks, I don't trade futures. Well, that's okay. You can apply it to Bitcoin. You can apply this to commodities. You can apply it also to currency pairs. Now, because it's a pullback method, this allows you to buy at lower prices. This, in my opinion, is easy to apply for options, because you have more room for it to go upwards and higher, okay? It's not guaranteeing you that you'll have higher gains or larger gains, but you have the ability to capture those larger gains, because we're trying to buy on a sell-off. So this is why I say, if you're an option trader, this may be a strategy you'd like to participate in. Now, as with all of our methods, we ask all of our students, if you decide to become a student of mine, to learn the strategy first. We don't just want you to jump in with both feet, because even though that only has 2 rules, most likely you'll be losing money because you just haven't studied it enough. Our edge here is consistency. Consistency means not like the way most people think, where it says, wow, that means I make gains on a consistent basis. Well, yes, that's part of it, but the major part of the definition of consistency means that you are aware of the fact that you will have losses. You have to become aware and accept that and embrace that losses are okay. There's nothing wrong with losses. What's wrong is when you have a strategy that's not able to recoup those losses, that continues to generate losses over and over again so that you go into a sustained drawdown. That's not consistent. That's just basically gambling. You're looking for a big home run winner, and unfortunately that's what most vendors and presenters like to peddle off on students. These fly-by-night systems that maybe have generated 1 or 2 big hits, but they can lose just as much as well. We don't believe in that. All of our methods are consistent, meaning they have a 2-step forward, 1-step back approach. The 1 step back is the loss that will occur, and I will show you a few losses, but I'll show you also how our methods can recoup those losses. So that's what you're looking for, because consistency is what will sustain you. I'm looking to teach students around the world to become consistent. I'm not looking to teach you some fly-by-night method that makes lots of money one year and then gives it all back the next. I mean, what kind of trader is that? That's not a real trader. That's just basically someone gambling who hit the jackpot and then gave it all back later on. What we're looking for is to sustain you with some consistent methodologies so that you can be trading 20, 30, 40 years down the road, okay? Okay, now let's talk a little bit specifically about this method. It employs 2 simple requirements. Those are the rules. Now, their relationship to the price automatically produces and generates the signals, okay? Now, in an overall uptrend, buy signals will be generated during a decline. And we don't know how low that decline will be. Sometimes it's a deep pullback, sometimes it's very shallow, and you'll see some examples of that. And it's the same thing if you're selling in an overall downtrend, because sell signals will be generated during a rally. Now, once again, if you're not really familiar with pullback trading, here's a brief description of how it works on these generic charts here. Let's say you have a nice uptrend, as you can see here on this line chart, okay? All right. Usually what happens, we know that things don't always go straight up. There's usually a pause and some type of brackets occur, okay? And what you want to see after that is you want to see the trend resume. Well, pullback traders like to buy on that little sell-off within that bracket there. That's a pullback trader. In other words, you're not looking for a breakout. You're not looking to buy as things go higher. You're looking to buy during that sell-off, hopefully at the bottom of that sell-off. It's the same way with a pullback sell. There's usually a strong trend that's established to the downside, but things rarely go straight down. Usually there's some type of bouncing or bracket, and then if it's strong enough, if the trend is strong enough, the trend continues to the downside. Well, rather than sell as the market's going lower, and sometimes that works, sometimes it doesn't, pullback traders like to sell on that little bounce, on that little rally. And usually, what they want to do is, obviously, you'd like to sell closer to the high of that little bounce before it resumes going lower. So that's what strategy 9 is based on. Now, we don't know how low or how high this pullback will be. And you'll see sometimes it's a very shallow or very small pullback. Sometimes it's a very deep pullback. The beauty of strategy 9 is that it's able to capture those both deep and shallow pullbacks before price resumes to the upside or downside. All right, so let's look at examples of actual setups that occurred in stocks in the last month. I've gone to some webinars. I always like to check out what other traders are talking about or other presenters like to show and present. And some of their ideas are okay. They've all been around before. They've just been rebranded. But what really amuses me is when they'll show examples that are like 2, 3 years old. And I think, how would someone want to purchase this knowing that it occurred 2 or 3 years ago? I want to see something that happened within the last month, sometimes within the last week, because that way I know it really works. So let me just share with you what happened this last month. Even though this is a brand new strategy, I'm not going to show you, what we researched on it that went back to last year. Let me show you what actually happened just a month ago. So if I had given this presentation, let's say 2 months ago, you could have taken advantage of these signals that were generated. All right, now these are just a few of the signals that were generated. All right, let's start out with some shallow pullbacks. Okay, shallow pullbacks usually mean that the sell-off is not that deep and the rally or bounce is not that big. So that means that you're not going to produce as many I'd say, potential for large gains. But we'll start out with some small gains and then we'll go on to larger ones. Now, someone looking at this would say, okay, well, Cisco here, we're not really doing much, but we are above the 50-period moving average. And that's the first rule. If you are above the 50 moving average, then you know the overall trend is up. So that means if the overall trend is up, you're looking for a pullback. Okay, so I can't give you any more information than that, but that's our first rule. We use the 50-period moving average to decide if we're having a pullback to the upside or a pullback to the downside. It's that simple. So if I backtrack here once again and look before we added the 50, someone would say, well, there's no real clear idea. In fact, if I look at this, it looks like we're rolling over. We have it looks like a bearish engulfing pattern here, but it looks like we're just rolling over, and I want to sell this. Well, you don't want to sell if you're above the 50. You want to look for a buying opportunity. And if we applied strategy number 9 to this, strategy number 9 generated a buy signal right here. Someone could say, well, Steve, it looks like it's rolling over. But had you purchased it, in just the next week, you could have made a quick 4 points. Now, it's the same thing with an MYL. Looking at this, we said, well, hey, we had a nice run up. Okay, I guess this was the pullback, right? And now we're going back up higher. Well, let's see what the market is telling us, not what some institution is doing, not what some earnings estimate is telling us. What is the market telling us? Well, the way we find out is by applying the 50-period moving average. And if price is above, well, yes, we'll want to be a buyer. But where is price in relation to the 50-period moving average? Price is below. So are we going to buy anything? Absolutely not. We're looking for selling opportunities. Now, I know a lot of you could say, but Steve, look at this nice bouncer. I could have bought somewhere down here and taken advantage of that. Sure, you could have. I'm not saying that there aren't some nice buying opportunities, but remember, our goal is to make you a consistent trader. And trust me, after applying this technique the way I was taught 40 years ago, you will have a greater level of consistency if you only sell below the 50 and only buy above. You will see some of these nice examples where there'll be some great buys below, but trust me, they're not very consistent. It's more consistent if you actually look for the selling opportunities that are right here. Strategy 9 generated 3 signals, and look what happened if you had bought right here and held on waiting for that big run. You would have given it all back. Now, let's look at some larger examples here with greater potential for gains. Anyone looking at this, AKAM would have said, wow, Steve, I don't want to touch this. This is obviously selling off. There's probably some terrible news. At the most, we're probably just going to come up here and fill this gap, but probably going to go down lower. I'm going to look to sell this, right? Well, what's the market telling us? The market's telling us that even though we opened below, we closed above the 50. So the overall trend is still up. And this is, in all actuality, a buying opportunity. Why? Because this is just the makings of a pullback. Now, with the other rule applied, strategy number 9 generated a buy signal right there, where most people were saying, well, this is where you got to get out, right? That was some bad news, maybe a bad earnings report, or maybe some institution has a sell program on it. We don't care about that stuff. We only listen to the market, and the market was actually generating a buy signal. Had you taken advantage of that buy signal, 6 points to the upside in the next couple of weeks. And in fact, we filled that gap and went through it like a knife goes through butter, just kept going higher and higher. So had you tried to sell thinking that we were only going to come back up here, 50% retracement, and then roll over, how would that have worked for you? Let's look at ALXN, okay? The same thing. Someone looking at this would say, well, wow, Steve, this is in a range, okay? Now, the trading room I like to go to says never trade a range market because that's where you get whipsawed. Well, maybe true sometimes, but you have to define if you're really in a range or not. Because if we apply the 50-period moving average, we're not in a range. The overall trend is up. So we're looking for buying opportunities. And strategy number 9 generated actually 3 altogether, okay? Now, you had a choice here. If you're the type of trader that likes to get in and out quickly, you could have bought somewhere down here and exited with a quick trade after a couple of days. And we have different exit levels. We have different stop placements. We have different ways to trade it. But if you're that type of a trader, most likely you would have been out, and then you could have gotten back in and taken advantage of this nice pullback. But if you're the type of trader that likes to stay in for the long haul, well, you could have taken advantage of these trades right here and just held on. So remember, once again, this is not a system. We do not teach nor trade systems because they require everyone, all of our students around the world, to trade the same way every time. And that goes entirely against our philosophy. That, in my opinion, is a recipe for disaster. No two traders should ever trade alike. So we have a student here that maybe took this signal and he says, I like to be in and out in a couple of days. So he got out with a nice profit in a couple of days. We have another student who says, no, I like to stay in for as much bang for my buck. And so he held on for about a month. And in the beginning of April, he took a maybe 14 or 15 point gain. There's different ways to do it. There is no one right or wrong way to trade. The only wrong way to trade is when you copy or mimic someone else. That is the wrong way to trade. All right, here's another example. Someone looking at this was the example we showed you earlier. Say, we are in a strict downtrend, Steve. Look at this. We are making lower highs and lower lows. That is the definition of a downtrend, right? Well, actually not in my book, because if you apply the 50-period moving average, this is the definition of a pullback, where I would say the majority of traders would look at this as a downtrend and something you should sell. I look at this as an opportunity. This is a deep pullback. So once the strategy number 9 puts its other rule into play, we have 2 buy signals that were generated. Okay? So where everyone else was saying, you got to sell this, Steve. This is a downtrend. This is the classic definition of a downtrend. We're saying, well, no, the first thing to find out whether you're in a downtrend or not is to apply the 50. And this is simply a pullback in an overall uptrend. That's the definition of a pullback. And 28 points you could have taken advantage of. Okay? So this is why most traders fail, because you're usually on the wrong side. Why would you sell above the 50? You never want to sell above the 50-period moving average. You only want to be a buyer. This is what we mean by consistency. Another example here in Triple M. Someone saying, well, Steve, this is obviously a strong sell-off. Yes, it is, but it doesn't mean that it's something you should flee from or not take advantage of, because we're still above the 50. This is something you should be looking at as a buying opportunity. Now, if we were selling off and we were below the 50, yes, I would say stay away from that. You don't want to buy it. And if you have a bounce, look to sell. But here, we are still above the 50, so these are all buying opportunities. And strategy number 9 generated 2 buy signals here in the first week of March. You had a really nice run-up. Now, you could have, once again, taken advantage of that and said, you know what, I'm going to get out. Or wait for another sell-off to occur, take advantage of this next buy signal, and either way, 15 points potentially you could have captured to the upside. How you want to trade it is up to you. Now, I know someone would say, well, Steve, I'm not very experienced. I wouldn't know how to get out or where exactly what type of trader I am. Don't worry. This is what we do. We work with you to find out if you like to stay in for the long haul, if you like to get in and out. And if you come up with that decision that, you know what, Steve, I like to get in and out quickly, great. We have exits that provide those for you, okay? So you'll know where to get in and out quickly. In fact, we have upwards of 6 different exit plans for you to choose from. This is how you become consistent, by making your own decisions. We're not going to tell you how to trade this. We simply provide you with these high probability setup places. Now, let's look at this example in NUS. The majority of traders would look at this and say, well, Steve, this is obviously support. We hit that bottom. Look at all of the closes to the upside. Here's an upward close, another upward, another upward, another upward. We had one small close down, and now we're going higher again. So this is in a small uptrend. I go to a chat room, and we've discussed this stocks, and the earnings supposed to be really good coming out next week. So we all like this, and we have this $10,000 system we purchased that looks at the institutions, and they're all buying it. So I'm going to be a buyer too, all right? This is the way 99.9% of all traders trade. You see how all my justifications were made off of someone or something else telling you what the market was going to do. Why don't we just listen to the source, which is the market in front of us? We apply the 50-period moving average, and we ask ourselves, where is price in relation to that? Price is below. So what's the first lesson we teach you? You never want to buy below the 50. Sure, you may get some nice trades every once in a while, just the same way a gambler, at the slot machine may hit a jackpot every once in a while. But trust me, if you do that long enough, just the way the casinos want you to stay in their casino long enough, they know you're going to give it back. And it's the same way with trading that way. If you buy continually below the 50, you'll eventually give everything back because there's no consistency in that. The consistent factor is to sell below the 50. And this is just perceived not as support, but as a little bounce in an overall downtrend. Okay? Now, if we apply the rules to strategy number 9, guess what? They actually generated a sell signal here. Someone could say, how can you sell? The institutions are buying this. We don't care what the institutions do. Trust me, I worked with the institutions when I was on the floor of the exchange, and they had no greater insight than anyone else. They were wrong half of the time I traded with them. So I would never trust the institutions. Even though they have more money than us, it doesn't matter. We're just following what the market wants to do. Okay? The market is telling us it wants to go lower and 15 points in the next week. Okay? So what happened to that great trend that was going upwards? What happened to the institutional buying? It doesn't make any difference. Okay? The market does what it wants to do. Let's look at Apple here. Okay? Once again, we have a great downtrend moving on right here, even though it looks like it's just for a short amount of time. Perhaps the indicators or perhaps the sentiment you're following is saying you've got to short Apple. Okay? Well, this is actually, once again, just a sell-off in an overall uptrend because we're above the 50. So this is a buying opportunity, not a selling opportunity. Strategy number 9 generated a buy signal on the 8th of March, 23 points in the next week or two. Okay? You think that could have helped you as opposed to thinking that Apple had topped out. All right, ILMN, once again, a sell-off, but above the 50. So not something to get worried about, something to look forward to taking advantage of if the requirements come into play. So all you would have to do on our platform, it's as simple as just clicking on strategy number 9 and clicking on, once you see the drop-down menu, clicking on windows, or I should say, I'm sorry, arrows in the drop-down window. And they would have generated 2 signals here. Okay, now let's say you had a really tight stop. Let's say you're a very conservative trader. This is what we mean by consistency. Had you taken this first signal, well, perhaps you had a stop just below this, and you would have been stopped out 2 days later. This is what we mean by consistency. Don't act the way most traders do, play the victim card, and go sulk and say this stuff doesn't work. You have to get back on the horse because another signal was generated a couple of days later. Had you taken advantage of that, you could have made back what you lost and possibly made some more. This is why we say this is really conducive to option trading because there's a lot more potential for some greater gains here. We're not guaranteeing it, but we've seen that. And a lot of our students who are new to this trade this with options, and they've told us that they like to simply buy calls or buy puts. All right, WBA. Here's another great example. Someone looking at this would say, this is a pullback, right? And okay, Steve, I know what you mean. I want to buy on these opportunities where price is selling off and it's starting to go back up. So I took advantage of this. I don't need to buy your strategy 9 because I kind of figured out how to do this, right? We were going up, just like the chart you showed. We pulled back and now we're starting to go up. So I bought right here and it's most likely going to keep going higher, right? Okay. This is why you need all the rules though. The first rule is you want to apply. Even though you think, well, this is a very bullish sign here. This is a bullish engulfing pattern and we're going back up. You always want to apply the 50-period moving average. And where is price? Price is below. So this is probably most likely a very inconsistent trade because you're going against the overall trend. It would be similar to swimming upstream or swimming. Have you ever swam in the ocean and you've been caught in a riptide? You know how difficult that is? That's the same thing with trading against the 50-period moving average. So right now you're caught in a riptide. Even though you think you're making some movement, you're really not going anywhere because strategy number 9 actually generated 2 sell signals, one right here and one right here. And had you held on, you potentially could have captured 30 points. Now, someone would say, well, Steve, how would we know? Oh, sure. Well, the stock gapped down like 20 points. There probably was some bad news. Well, we didn't know that. No, we don't research any news, so there's no requirement of news involved in any of our strategies. So how come we were on the right side? We didn't know that. It's because the market tells you what it wants to do. Therefore, it's not required to listen to the institutions or to volume or to some guy in a chat room or a trading room. Remember, as your mentor, my goal is I want to make you self-sufficient. I want you to make your own decisions based off what the chart in front of you is telling you. You don't have to waste your time and money trying to figure things out that are showing no signs of consistency. If these things, institutions, following the earnings, guys in chat rooms, if these things worked, why do the majority of traders fail? It's because they don't work. And maybe they work for them, but no two traders should ever trade alike, because usually when things only work for one person, it means that they're seeing something that is very difficult to teach, to impart on someone else. So therefore, you shouldn't trust that, because they're seeing, or they have this inward, clock, or this inward type of charting system that tells them. But you can't always teach that. You can teach the 50-period moving average and the rules to strategy number 9, though. Here's another example in Tesla, okay? Once again, someone say, well, Steve, this is obviously in an uptrend. We're making higher highs, so I want to go on board and buy this. Well, we're below the 50. There's no consistency in that, so I would get out as soon as possible, because we generated a sell signal in strategy number 9, and the stock went down right away, okay? So what happened to that really nice rally? Remember, you don't want to swim against the current. That's the 50-period moving average. You'll have higher level of consistency. Now, at this point, you get another bounce, and someone would say, well, Steve, yeah, you told me not to buy, and then look what happened here, okay? We had a nice doji, and we have a nice morning star. I could have taken advantage of that. Sure, you could have, but guess what? More sell signals were generated, and this is what we mean by consistency. The first 2 may not have worked, but had you gotten on board for the 3rd or 4th one, guess what? You would have made all that back. So what happened to the nice bounce here? This is what we mean by consistency. You will have some losses time and time again, but you have to get back on board, or else you'll miss an opportunity to recoup those losses. Another example here in BIIB, okay, doesn't look like much is happening here, but if we apply the 50 in strategy number 9, we see 2 sell signals generated. Now, if you had taken the first one and had a tight stop, most likely you'd be stopped out, but if you weren't stopped out, let's say you had the puts and you just wanted to hold on, you could have purchased another put here, and that would have been a very nice trade, okay? How did we know this was going to drop down 100 and some points? We had no idea. All we knew is that the market was telling us prior to that drop that it wanted to go lower. Why? Because it was below the 50, and also because the second rule was confirming that this was just a pullback. This was not in any way, shape, or form a bounce to the upside that was going to go higher. So do you see how simple it is when you make your trading simple? You don't have to overcomplicate things to be a consistent trader. Now let's look at some different time frames, because we know not everyone just trades daily stocks. Let's look at a weekly chart of Netflix, okay? Here's a weekly chart. Now obviously it's been going higher, but let's say you thought it had topped out. Well, if you apply and you see how strongly it went up, well, gosh, that would have been a bad decision. But it was actually very easy to see, because we were above the 50 on this weekly the entire time. And once you applied strategy number 9, you see that we had a buy signal right here. And if you missed that, there were more generated along the way. So you can apply this to a weekly chart. We can also apply this to the downside in a weekly chart. KHC, someone looking at this would say, well, we finally bottomed out. I'm going to buy this because it's going higher. The same rule applies. You apply a 50-period moving average, and that's not an opportunity to go long. It's an opportunity to sell. So if you were, unfortunately, long this, you should be looking to get out. Or if you wanted to, you could buy some puts in this, because 2 sell signals were generated. And on a weekly time frame, the stock fell 31 points coming into February of this past year. Here's a monthly chart of DVM. Now, someone was saying this, well, Steve, how do you trade this? This is really like in a rangy, choppy market. Well, we're below the 50, so it's easy. You see how half the decision is made for you? You know you're only going to be a seller now. And then you apply the other rule, and there was a sell signal generated here for 15-point potential, another one here for 10 potential points, and the last one here for 20 potential points. It's really simple once you're in sync with the market. How about a 5-minute chart? I know we have a lot of day traders who like to day trade stocks. Well, this was just last week, April 1st, as a matter of fact, in Netflix. We see here that we had a really nice run-up, and then it looks like we're starting to roll over. If we apply the 50, we know that we're still above the 50, so this is just an opportunity to look for a buy at a lower price. Strategy number 9 generated a buy here, roughly about 8 in the morning, 7 points to the upside towards the end of the day, okay? Not a bad day trade. Could have purchased some options on that as well. Let's look at some other markets. Here's a 4-hour chart of the euro-yen. Okay, a lot of currency pair traders like to trade 4-hour charts. We are below the 50. All right, so we're only going to be a seller, right, on this 4-hour trade. Well, here was a sell signal generated here. And it went down a little bit in the next couple of days, but then it started to bounce up again. Now, if you're the type of trader that likes to get in and out quickly, you most likely would have exited with a small gain. But if you want to stay in for the long haul, you would have been reassured that you were on the right side because another sell signal was generated here, even though it was just barely touching the 50, and now 825 pips in the next couple of days. That's over $8,000 per contract had you decided to potentially hold on that long. Now, we're not saying you would have, but it's your choice. If you wanted to hold out that, you could have easily done that. How about a weekly chart of KC? This is coffee, okay? Now, coffee was going lower, and then it had a nice bounce. So someone say, obviously, Steve, this is in an uptrend, right? Well, not really. We are below the 50. And someone would say, well, gosh, I would have missed that nice buy here. There's a morning star here in coffee. Why didn't I take advantage of it? Well, sure, you will see some bottoms in every market every once in a while, but where's the consistency? The consistency is being in sync with the market, and that's what strategy 9 does, because what happened to that gain? You would have given it all back if you held out long enough, and unfortunately, that's what most traders do. Another example here in SB, that's sugar, okay? If you like to trade commodities, we're above the 50, a buy signal was generated, and look at the nice upward move. This was, I believe, just last month in sugar. So we've looked at commodities, we looked at currency pairs. Let's look at the E-mini futures. Here is a 30-minute chart. We're above the 50. The same rules apply, so we look for a buy signal. In 3 days, 65 points, okay, or roughly over $3,200 per unit if you decided to hold on in 3 days, okay? All right, so let's review since we're coming towards the end of today's presentation. Strategy number 9 is a brand new strategy. It's basically only 3 months old, okay? We haven't even really gone into the first quarter. It's unbelievable how many students we have now. It's a brand new strategy designed to trade pullbacks using 2 simple indicators, 2 simple rules. You can apply it to any market, any time frame, any direction, as I just shown you. One of the beauties of this is that if you're an option trader, this is a great strategy for trading options because you have an opportunity to buy at these lower levels, which will give you the potential, not guaranteed, but the potential for some large gains that you just saw, okay? Once again, learn the strategy. Even though we only have 2 rules, learn the strategy like the back of your hand first. Our edge here is consistency, meaning there will be losses from time to time, as I just showed you, a few losses. But each and every one of those losses was quickly recouped by another signal. So that's what we mean by being consistent. Consistency will sustain you, not some fly-by-night system that produces one great winner and then the remainder of the year has consistency in losing, and by the end of the year, you've given it all back. Trust me, even though we've into the 3rd or 4th month of the year, you owe it to yourself to start out 2019 in the right direction. This strategy can really put you in the right direction. So we have a great attendee offer for you today, a great discount. We're going to offer you strategy number 9 along with our platform, the PTS Primo charting platform, for 1 year. You're going to get free use for 1 year. Now, this would normally cost you over $1,700. And the beauty of having the strategy is that everything is pre-formatted. You're 1 click away from generating the educational up and down arrows so you can check your work. But we teach you everything. It's not a system. Once again, you're going to know why a strategy signal has been generated. All right? Let's talk about what you're going to be getting in the platform. You're going to be getting all of these things, but one of the extra bonuses is that it comes with ability to scan. So if you're the type of trader that likes to see what the signals are for the next day, this is a great, great opportunity to do that with our scanner. And let me show you how simple it is. Once you click on the strategy number 9 tab right here, you'll get a drop-down menu that gives you all the different options for signal arrows, for indicators. You just click on scan and this window will appear. You click on the load symbols of whatever market you're interested in. In this example, it was the NASDAQ 100, and then click on scan. And you'll, in roughly about 30 seconds, see a series of either green or red bars. They simply mean, the green bars mean there's a buy signal in the corresponding stock. The red ones mean there's a sell signal. And you can do this with any market. If you're a currency pair trader, you can scan the currencies. If you're an E-mini trader, you can scan different markets in E-mini, or you can scan different time frames, 30 minutes, an hour, 5 minutes. It's up to you. You can scan for Bitcoin, for the DAX exchange, the Philippines exchange. We have all of these markets already pre-formatted in the platform for you to scan for. Now, let's say you had become a member of this strategy course, and you had the scanning ability, you had studied and researched, and you're scanning one night, and you would have seen this. This was ACN, okay? Now looking at this was just about 2 or 3 weeks ago. If you just looked at this chart, you would have said, from what most classes teach you, would have said, well, there's nothing going on here. We're in a range market. There's no news coming out on it. There's no institutional interest. We're basically just bouncing back and forth. I'm going to wait for a breakout for it to tell me what to do, okay? All right, that's the way most traders trade. But where are we in relation to the 50? We are above. So obviously, the overall trend is up. And if you know we may be in a range market, you want to have a buyer's bias. Now, if you scanned the night before, you would have seen on the close of the 25th of March, a buy signal was generated. This was a very shallow pullback, but it still generated a buy signal. Now, you could have run this scan either 5 minutes before the close or before the opening, or it'd be up to you. Either way, you had an opportunity. If you did it the night before, you could have purchased options, purchased calls, or maybe you would have done them in the opening of the next day or purchased the actual stock. But look what happened in the next 3 days. The stock went up 12 points. This just happened 2 or 3 weeks ago. All right. So this is what I mean by we're not trying to cherry pick the best examples. I showed you some examples of losses and how it quickly recouped them. But we're not going back 2 or 3 years. We're showing you things that happened in the last 2 or 3 weeks. And this was an actual example of something you could have scanned for. 2018 is over. Trust me, a year from today, you will have wished you became a member of this course. And when you see the discount we're offering you, you're really going to hope you became a member, because most likely the price will even double from what we're even offering on the standard conventional price. Okay, here's our Super New Strategy Special for all the attendees today. Once again, we're going to offer you strategy number 9, along with 1 free year of the PTS Primo charting platform. That's over $1,700 value. In fact, let's break it down. If you purchase these two things separately, you would be spending over $4,700. That's how valuable they are. But we're not going to offer that price for you. Trust me. We're going to slash that, and we're going to discount it down to $29.95. And if you want, you can have a payment plan available as well. So if you can't come up with the $29.95, we will furnish a payment plan. So for a small deposit, you can still be up and running. Now, you're going to be saving over $1,700 on this. So you have two options. You can either have one lump sum of $29.95 or choose a payment plan for a small deposit. You can still be up and running as early as today. That's how simple it is. And remember, this time next year, that $4,735 may be up to close to $8,000 or $9,000. So we want to give you a chance to get in. You've just seen some great examples of actual signals that were generated in the last couple of weeks. Why not take advantage of the ones that are going to be generated in the next few weeks, okay? Here's how to take advantage of this. Contact my sister site, which is Proprietary Strategies. I developed a platform with them, and they handle all of our discounts and all of our packaging of the courses. I would suggest calling them directly at area code 310-598-6677, and they can give you more information about discounts, and they can establish a payment plan with you. Or if you want to, for more information, go to the link below, and that will take you to the sign-up page and give you some more information as well. Now, we've posted that link on the chat box on the far right, so if you want to simply click on a live link, go to the chat box on the far right. Now, if you have any questions, please go to your question and answer box in the GoToWebinar column, and I will be happy to answer them. But remember, once again, I would really strongly suggest contacting Proprietary Strategies. Even if you're still on the fence about this, they can give you some more information. There's absolutely no obligation. They would be happy to answer any question you have, something that maybe you forgot to ask me right now, or maybe a question just about discounts or about pricing or about the platform. They would be more than happy, okay? A few questions here. People are saying, on the platform, does it only scan for daily signals? No, that's a good question. We really have made scanning simple. And if you're a day trader, you can scan for 10-minute setups. You can scan for hourly. You can scan for 4 hours. I mean, there's multiple time frames. You can scan for weekly examples as well if you're a swing trader, because strategy number 9 generates signals during the week as well. So you can scan for any time frame, any direction, and just about any market, because we provide you with a list of, as I said, the Indian stock exchanges, the DAX, Toronto exchange, Canadian markets, European markets, Bitcoin, currency pairs, futures, just about any market you can think of, including currency pairs. So we really give you the full benefit of the doubt of any market, any time frame you want to scan for. So it's not just daily bars of stocks, okay? And on top of that, we make it so simple because, trust me, a scan of, let's say, the NASDAQ 100 or the S&P probably takes you about less than a minute to scan. So this is not something you have to figure out how to do. Okay, load up the scanning page, go to the markets you're interested in, figure out which ones, figure out exactly what strategy. Okay, a half hour later, you've gotten all your signals for the next day. We purposely made it simple so that in less than a minute sometimes, you know what the signals are. And you just have to scroll down and see which ones you're interested in. That's how easy it is. It's really simple. It doesn't have to take up a lot of your time, okay? Steve, will I be there to help you? Oh, yes, that's one thing I didn't mention. With all of our strategies and with all of our courses, you get my personal email address. So any question, anything that has to do with teaching or with trading of the strategy, you can contact me whenever you'd like, and I will be there to answer it immediately. And we have students that emailed me this morning for questions about different things and different strategies. And so I'm always there. I'll answer as soon as I can, okay? So take it from someone who's actually trading this. Any question you have, I'll be able to answer for you. So it's really simple to answer any question. We don't just kind of give you the program and say, good luck, and we hope you're all the best. You know, it's not like that. You're still a student of mine, and you can contact me whenever you'd like via email, okay? Okay. Yes, the number is right there. People are asking about the number. That is the number that's not my number. That's for Proprietary Strategy. So there's absolutely no obligation. If you're interested or have some more questions regarding the discount or the payment plans, I would strongly suggest contacting Proprietary Strategies right now. Once again, they have personal trading consultants manning the phones. There is no way any obligation on your part. They will answer any questions. You can still think about it. My only suggestion would be not to sit on this offer too long because it may go back up to that $4,700 range in the next week or so. So you don't want to, after a week or two, say, okay, I watched this webinar again. Boy, I guess you're right. I've been following you on Twitter, and I see you've tweeted some great strategy number 9 setups recently. So I'm convinced I'll become a member now. And then the price is back up to $4,700. So you don't want to really mess up your chances for a great discount. I would contact them right away to answer any questions. Watch the video if you want, but really hurry up and make your mind before we go on to the next discount for another program we're offering, okay? Okay, if there are no other questions, as we conclude here, I hope you learned a little bit. Once I said, I apologize. In the beginning, I stated that I couldn't give away too much information because this is really a very simple strategy, the simplest strategy I've ever traded in my life. Only 2 rules. It doesn't get simpler than that. So I'm sorry I couldn't give away too much, but if you left with one thing here, you saw how strong and how powerful just using the 50-period moving average as your basis for knowing whether to be a buyer or a seller, how strong that is. And that will really help you. Go out and research that on your own right now. See how your last 10 or 12 trades would have been if you implemented that. And then you'll see how powerful this is, and maybe it'll convince you that strategy number 9 is your strategy you should be trading, okay? As we close, I want to say thank you so much for attending. I really wish you the best of luck as you take one last look at our disclaimer. And mostly, I really look forward to you all becoming students of mine in the new strategy number 9 course. Thank you so much for attending. I hope to see you in class, and I'll see you next time. Bye-bye.